This is the World Financial Report podcast. My name is Randy Marshall. Joining us is our financial and diamond expert, Harold Siegel. We're taping on April 11th, 2019. Our time is 7:33 a.m. Mountain. Don't forget, next weekend is a long weekend for Easter. Most people will get Friday, Saturday, Sunday, and Monday off. US dollar is at 97.09, Canadian dollar 74.74, the pound at 130.75, the euro at 112.57, gold at 12.95.70, silver at $15. Gold silver ratio is 86.40. Platinum 8.99, palladium 13.52, WTI 63.84, Brent at 71.02, nat gas at 2.69, Bitcoin in US dollars 5,029.18, Bitcoin Canadian 6730.80. Now the Dow is at 26,157, S&P 2,888, NASDAQ at 7964, and TSX 16,396. Harold, give us an update on your thoughts about the metals markets and where they're at right now.
Okay, well, gold was rallying, and it did rally this week. We got back over 1,300, and it looked very strong. But then today, as we're taping the show, it's down $11. So again, gold has got to break through that key resistance level before we're going to be major buyers of gold. It's got to be above 1380. And again, every time we get up there, the market seems to pull back. Again, my feeling on gold is very simple. If there's no geopolitical situations that are going to affect it over the short term, and if the U.S. dollar still remains very strong, which it is, then gold is going to trade within this range. It would take something substantial to push gold through 1380. And that's what we would like to see, a substantial situation, a changing in the market that's going to make gold a viable running market again. When we caught gold back in 2000, it went from 250, and it took 11 years for it to get to 1900, but that was the biggest bull market in metals history, bigger than any move that gold has ever made. It pulled back down to 1,050, and we all know the reason why that happened. And now the market's trading around the high 12s into the low 13s. But the important number for gold is 1380. You've got to see two closes above that in order, in my opinion, for gold to start to move into a new bull market. We also silver's not doing anything. Silver's just trading in a very, very tight range. I think the ratio between gold and silver right now is about 85 to 1. It should be 16 to 1 in a bull market type of scenario. So it just shows that gold is a much stronger metal at this particular point. So we're going to have to see. Again, gold's going to have to break 1380 in order for it to be a viable running market again. The platinum market that we recommended about a month ago, because palladium was so high, palladium was at 1,600. Platinum was at 800, and we felt that it was a ridiculous spread between the two metals, seeing that they're both used as in the catalytic converter market. So the fact is that at 1,600, palladium was way too high, and at $800, platinum was way too low. So we did say to conservatively get involved in the platinum market, you could go to your local coin store and buy some platinum at $800, and today it hit 910. So in the past month, I would say, we've seen platinum move up $110 as palladium has dropped almost 300. So again, in that sense, anyone who took advantage of that, congratulations to you. And I do believe that spread is going to tighten even further because, again, there's the same reason that palladium went to 1,600 is the same reason why platinum is going to get back up probably, into the $1,100 or $1,200 level because it was too cheap and palladium was way too expensive. So again, that's what I see in that market. Again, I certainly felt that palladium was the only buy in the metals market at that point, and has certainly proved to be true.
Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. Get the companion to the podcast, our free weekly newsletter. It has all the info that we talk about on today's show. One thing that I thought was really important that we've talked about in the past, buybacks, share buybacks by companies. They have really been the driver to keeping the stock market moving up and stabilized. Goldman Sachs considers a world without buybacks. It looks ominous. With political scrutiny of stock market buybacks growing, Goldman Sachs started assessing an extreme scenario, a world without buybacks. The picture doesn't look pretty. That's because corporate demand has far exceeded that from all other investors combined, according to strategists led by David Kostin. Since 2010, net buybacks averaged about $420 billion annually, while buying from households, mutual funds, pension funds, and foreign investors was less than $10 billion for each. Federal Reserve data compiled by Goldman showed repurchases have consistently been the largest source of U.S. equity demand, the strategist wrote in a note. Without company buybacks, demand for shares would fall dramatically. You can see that without the buybacks, the stock market is in serious trouble.
You better believe it. It's always been present in the market. And, when a company buys back their own shares, it's for a specific reason. And again, if they were to outlaw that, which I don't think that they would, it would really hurt the market substantially. So again, the market is trading in a range also. It's not like we've got a raging bull market in stocks either. The fact is that the stock market is trading in a very tight range, is down from its highs. And even though it's doing better than other world markets, it still has its issues. We saw the huge declines in Amazon and other stocks like that at the tail end of last year, of 2018, where the markets dropped off substantially. So the fact is that the market is still high, but not at its highs. It's still very expensive, which means that most investors cannot invest in the stock market per se because stocks are way too expensive for example, the middle class. And stock market is not something that I'm trading at this time. After 1999 and seeing what happened, when NASDAQ dropped from 5,000 down to 1,000 and, seeing the drops in the market where in 2008 the Dow dropped from 14,000 to 6,500, it's just way too volatile for me. And for most people that trade in the stock market do not do well. In fact, most people lose their money if they're trading their own accounts. So something that we would not recommend. It's way too risky. But the fact is there are situations in the market, for example, a $22 trillion debt that could, hurt the market substantially. We could wake up like we did in 2008 and, find ourselves down 1,000 points in the day and see the market crash. So not something that I'm recommending at this point. In fact, with the way the world markets are at this time, there's not a lot of markets that are safe to invest in. Interest rates are still extremely low. So putting your money in the bank, is not really going to give you the type of returns that we saw back when we were getting even 5 and 7% returns on our money. We're not making anywhere close to that anymore. So anything above what you're putting in the bank is a risk, and you should take that into consideration when making any investment.
The Canadian dollar is lining up to be the world's most frustrating currency. Cheap, but held back by soft growth and housing market concerns. That according to Kit Jukas, Societe Generale Global Fixed Income Strategist. We have heard analysis done on the Canadian dollar saying it could go to 71, 72 cents from where we are today at around 74, 75. And there was even an analysis done saying 62 cents. Cannabis industry researcher BDS Analytics has cut the estimate for the size of Canada's legal pot market to $5.2 billion US by 2024 from its previous call of US $5.9 billion by 2022. This is a big number. UBS estimates roughly 75,000 more stores need to close in the United States should e-commerce penetrate to 25% by 2026 from 16% 15% today. We had on the past podcast that online sales now are exceeding retail sales for brick and mortar. Within that, about 21,000 clothing stores, 10,000 consumer electronics stores, 8,000 home furnishing stores, and 1,000 home improvement stores should close, according to UBS. Walmart wants store workers to help out customers instead of mopping up floors and unloading boxes in the back room, so it's increasingly turning to robots to fill those tasks. The world's largest retailer announced Tuesday that it's adding thousands of new robots to its stores by next February. It expects to have autonomous floor scrubbers in 1,860 of its more than 4,700 U.S. stores. Walmart will also have robots that can scan shelves for inventory at 350 stores. Harold, you can see the world is changing dramatically. 75,000 more stores need to close. Walmart amping up the use of robotics. This is a changing world that we're living in.
You bet, Randy. I mean, with that many retail stores closing, and that's a frightening number, it's got to affect, obviously, the real estate market and the unemployment numbers, because in all those stores, there's hundreds and hundreds of people working. So it's going to be an unbelievable thing. I just don't see how that is good for the economy in any way. And then on top of that, if, retailers like Walmart and McDonald's and fast food places and places like that are going to employ robots as opposed to humans, again, I just don't see how that's going to be beneficial to the economy in any way. I mean, it's going to make possibly these companies more profitable because obviously they don't have to pay an hourly wage and all the benefits and everything to robots, but still it's going to be a really hurtful situation for the economy, and it has to be for the employment situation.
People have to make money to be able to buy your product. If no one is working, that's where it gets really sticky. U.S. budget deficit widens to $691 billion in the first half of 2019. That is a 15% increase from last year at this time. The budget deficit could quite easily, if it keeps going the way it is, be around $1.5 trillion. The United States, $22 trillion in debt right now. Federal officials are leaving the door open for more rate hikes if the economy improves, Fed minutes say. Some participants indicated if the economy evolved as they currently expect, then they would take a look at raising rates towards the end of the year. Harold, that is a big number, $691 billion in the first half of 2019. The United States continues to go into debt. It's something that we monitor on a regular basis, and it will get even worse if they raise rates, because then they have to pay more interest on the debt that they owe.
You bet, Randy. In actual fact, the entire picture there doesn't look very good. A rise in interest rates would hurt the stock market. We know that from the past. It's going to strengthen the dollar, which means that the dollar will gain a lot of strength, probably because we're sitting at 97 right now. And don't forget, when Trump first got in, it went up to 103. So it certainly has some room to move. And that would suppress the price of some commodities. So, and the other thing is that if Canada doesn't raise rates, which it looks like they're not going to do, it means that their dollar is going to weaken. And to hit 71 cents or 72 cents from 74 is nothing. That could happen in no time at all. If the Canadian dollar did drop down to 61 or 62 cents, that would be a horrific situation.
Connect with Harold at rarecoloreddiamonds.com. Lots of diamond news. Get our free weekly newsletter from Harold this week. Rare 25-carat diamond to lead Christie's Geneva. They have their sale, Magnificent Jewels, May 15th. They are going to be selling a rectangular cut 25.27-carat D-color Yonker 5 diamond. It will go under the hammer. The estimate on it is $2.5 million to $3.5 million. It is a legendary stone. It was cut from the 726-carat rough that South African farmer Johannes Jacobus Yonker discovered in 1934. At that time, the Yonker was the fourth largest gem-quality diamond ever unearthed. A subsidiary belonging to Sir Ernest Oppenheimer, the founder of Anglo-American and former De Beers chairman, bought the polished stone. In 1935, Harry Winston purchased the diamond and set it in a ring. Later that year, it was displayed displayed during the Silver Jubilee celebrations for King George V and Queen Mary. Christie's will also offer a heart-shaped fancy deep blue diamond ring featuring 2 stones weighing 22.2 carats and 2 carats, valued at $3.5 to $4.5 million, and separately an old cushion-cut 118.05 carat fancy yellow diamond that carries an estimate of $2.5 to $3.5 million. Harold, that Yonker diamond is ultra rare.
You bet. I mean, Randy, I just love when those type of diamonds come onto the market. I mean, to be able to see and learn the history and the provenance, of diamonds like that. And let's face it, in the past 2 or 3 years, there's just been some sensational diamonds that have come up for sale. So just absolutely amazing to be able to see diamonds like that come onto the market. It's a once-in-a-lifetime thing.
Connect with Harold at rarecoloreddiamonds.com to learn more about the diamond market. Now, Sotheby's, they have their sale in Geneva May the 14th, and they have a diamond tiara made by Fabergé in 1903 for Duchess Cecilie von Mecklenburg-Schwerin. The last crown princess of Prussia will go under the hammer. The headpiece, which was a present from her Russian relatives upon her marriage to Crown Prince Willem, is valued at $200,000 to $300,000. Other notable pieces include a brilliant cut 36.57 carat D color type 2A diamond. The estimate on that $4.8 million to $5.8 million, and an emerald cut 18.86 carat D color type 2A ring by Harry Winston, and that is expected to fetch $800,000 to $1.2 million. Harold, May 14th, 15th, Geneva. Every year, Sotheby's and Christie's bring out the ultra rare and auction them off, and I can't wait to see what happens.
Oh, you and me both, and a lot of the world just want to see it. It's just really so special. And I'll tell you who's really been buying up everything in sight is Lawrence Graff. He's just been buying the most amazing diamonds, and he's just the king of diamonds as far as I'm concerned. He's got probably the best collection of diamonds of anybody, and he's buying all the top-notch diamonds right now. So it just goes to show you that the markets are the markets, and some people are comfortable trading the markets because that's what they've always done. Some people are comfortable trading in real estate, and others are comfortable trading in hard assets, owning long-term diamonds, that they keep in the family for generations type of thing. And these are just very, very special gems, and it's just a pleasure to see when they come out on the market.
Sotheby's next week, along with Christie's, will be in New York City for sales. Sotheby's has their sale April 17th, and they will be offering, the top lot is a 3.24 carat brilliant cut fancy intense blue diamond ring with natural color and VVS1 clarity. The estimate on it, $2.5 to $3 million. Also highlighted a ring featuring 3.38 carat square emerald cut fancy vivid yellow, accented by round diamonds. The estimate on that is $60,000 to $80,000. Now, Christie's, their sale is April the 16th, and they have some heritage-type diamonds. In fact, some call it maybe a Holy Grail-type moment. Such is the case with a pair of fancy, intense yellow diamonds included in the sale, one totaling 3.65 carats and set in a ring, and the other totaling 35.06 carats and originally set as a pendant. The diamonds will be sold as separate lots, with the ring estimated to fetch anywhere from $600,000 to $800,000, while the pendant carries an estimate of $500,000 to $700,000. Daphne Lingon, head of jewelry for Christie's America, said, "I've been working on these two pieces for 15 years. They're quite impressive. The owner has had these pieces for years. I've stayed in touch with them, updating them on how the market is, and right now the market is strong, especially for colored diamonds. The event's highlight should be this blue diamond, which is a vivid blue. It's at 3.06 carats and 2.61 carats. The stones are currently set in a ring and will be sold together. The estimate on it, $6 to $8 million. To find a pair of matching stones like this, which are the same color and quality, is exceptional." Harold, next week we'll have two auctions in New York City, some results here in the next week or so, but there's some historic pieces that are going up on the auction block, and one that I thought was very interesting, a 1937 Cartier Snow White and the Seven Dwarfs enamel charm bracelet that may be the first piece of jewelry ever created to promote a movie. I would not be surprised to see this go for a record price.
Me neither. Me neither. That sounds very, very exciting. It's just very exciting when these type of pieces come up. And the fact is that, as we've stated before, is that, these auctions are not only about these multi-million dollar pieces. That's the sex appeal of the whole auction and everything and the major drawing card. But in all reality, there's lots of diamonds that sell at Christie's and Sotheby's and other auctions like that are not multi-million dollar diamonds, that are diamonds in the 50,000, 100,000, 200,000 range. And those diamonds do very, very well at auction also. So again, the colored diamond market is a very good market as a longer term investment, especially in the times that we're living in right now, where there's so much uncertainty in the world. So again, just very, very pleased to see that these magnificent pieces are coming up for auction and that we're able to bring this information to our clients and listeners.
A historic piece of paper is coming up for auction. Documents that resulted in the cutting of the world's largest diamond for British Crown Jewelers. Bonhams is selling the original manuscript copy dated Jan 29, 1908, an agreement between King Edward and London diamond brokers M.J. Levy and Nephews. This document brokered the cutting of the 3,106 carat Cullinan diamond, still the largest gem-quality rough diamond ever discovered. Harold, the estimate on this, and this is in U.S. dollars, $2,600 to $3,900. For someone that's a fan of diamonds, having this historic legal document would be a really neat piece to any diamond collection.
You better believe it. Proving provenance or having a famous signature or whatever is another collectible that could do tremendously well. We've had in the past when we've shown Elizabeth Taylor's pieces type of thing, that just Elizabeth Taylor's signature on a piece of paper, and in this case in a drawing of a piece that she had done, was worth $250,000 at auction. So it's just really amazing what the value of these collectibles are, especially when it pertains to very important pieces.
Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. Get our free weekly newsletter, the companion to the podcast. Graf has unveiled the 67 polished stones it cut from the 1,109 carat Licidi Lorona, including a record-breaking 302 carat diamond. The jeweler has named the square emerald cut 302.37 carat D-colored diamond the Graf Licidi Lorona. It has yet to receive final certification for the stone, but expects a very high clarity grading, that according to a Graf spokesman. If it turns out to be flawless, it would be the largest D-flawless the GIA has graded, according to the spokesman. But this is another piece that no doubt will be a showcase for Graf and eventually may end up at auction at some point.
Well, it's got to be one of the greatest diamonds ever in the history. Over 300 carat emerald cut, D flawless. If it does get a flawless grade, I don't know what the value of a diamond like that could be. We've never seen anything like it. I've seen, the very, very odd time, 100 carat D flawless type 2A emerald cut diamond. And I think that diamond sold somewhere in the 70 to 80 million range. So you could imagine, if that diamond ever went up for sale, what that would go for. He's just such an amazing person in the business, Graf. He just knows his business, and he started off as really nothing in the business and really has grown himself into the probably number one dealer of diamonds in the world. Man, I cannot wait to see that diamond.
They say it's the largest of its shape in history. The entire process, from discovery through cutting and polishing stages, took more than 18 months. Cutting a diamond of this size is an art form, the ultimate art of sculpture, according to Lawrence Graf. It's the riskiest form of art because you can never add and you can never cover up a mistake. You can only take away. You have to be careful and you have to be perfect. And it looks like they have hit the mark with this diamond. Closing on the diamond front, the Boston Red Sox 2018 World Championship ring was unveiled. 2019 Fenway opener. We should add the Blue Jays beat Boston, which we were happy about. The championship rings, made by Jostens, have 185 stones, which represent 162 regular season games plus 14 preseason games and 9 World Series titles now held by the Sox. It is a very beautiful ring. Harold, I can't wait to see what the New England Patriots do for their ring. They have another championship under their belt. Number 6, can you just imagine what they'll do with that monster ring?
Well, I know when they beat Atlanta and they came back from 28-3, that was signified in the amount of diamonds on that Super Bowl ring. So, again, I can't wait. I'm sure Robert Kraft is going to do a great job, as he always does. And, 6 rings for Brady, it's just an amazing thing. I don't think we'll ever see this happen again.
Rob Gronkowski sold his Boston penthouse for $2.3 million. You can take a look at the entire penthouse. Just get our free weekly newsletter from Herald. We have the story. It is a beautiful place. He bought the home back in 2016 for $1.9 million. So the Gronk, 29 years old, who recently retired, made a little bit of money. Michael Corleone's house from The Godfather is selling for $1.37 million in Staten Island, a historic home for those that love The Godfather. And it is now finalized. Jeff Bezos to keep 75% of the couple's Amazon stock after finalizing his divorce. Mackenzie Bezos announced on Twitter that she and Jeff have completed the process of dissolving their marriage. She grants him 75% of their stock, along with voting control. She also will give him her interest in the Washington Post, the Blue Origin Aerospace company. The settlement would make her among the 5 richest women in the world. I think she ended up getting around $35 billion. Her ex will remain the world's richest person, but she'll be doing okay with $35 billion. Harold, the Gronk, though, is selling his place, sort of neat.
It is, but it concerns me because it means that he's not going to re-sign, and it means that he could be moving out of Boston. So that's what it would signify to me. LA could be calling his name, and he may go into the movie business. But again, 9 years, he's been one of the, you think of a guy by the name of Gronk, and you think that maybe he's not that bright, but he has saved all of his money, and he's done very, very well. And congratulations to him. He's one of my favorite players, but just a really good role model for the younger generation to show what hard work can do. And he's the epitome of that. He's just a great guy.
Any final thoughts here on the podcast, Harold?
Yeah, again, just be very, very careful in these markets. Don't jump into a market for the sake of just getting some investment money into a market. The stock market, again, is trading in a range. The metals are trading in a range. There's not a lot of investments out there that make a lot of sense. Until we start to see some changes in geopolitical situations or interest rates type of thing, I believe that the markets are still going to continue to trade in that range. And unless something happens to push gold above 1380, again, we're going to have to see what happens. As long as the dollar remains strong, again, aside from something substantial happening, I just see gold trading in that range until something tells it it's going to break above 1380, and then we'll be right on top of that.
Thank you very much, Harold, for another podcast.
It's my pleasure, Randy. Wish everybody a wonderful weekend and a very profitable day.
Don't forget, next weekend, Easter long weekend, for a lot of people, they will be off for 4 days. I know Friday is Good Friday, then Saturday, Sunday, and then Easter Monday. Connect with Harold at rarecoloreddiamonds.com. This week, we had one of our best newsletters with lots of diamond information. Connect with Harold, rarecoloreddiamonds.com. Listen every week to the podcast, get our free weekly newsletter, and you will be up to date on the financial markets. That's it. Another edition of the World Financial Report podcast. For Harold Siegel, my name is Randy Marshall. We will talk to you next week.